power-packed action here. This is the Bitcoin chart. Remember what we talked about here. This is your major line. We are seeing some selling in Bitcoin today, which makes sense, right? We're seeing risk assets being sold off. We're seeing the dollar surge to the upside. Remember, Bitcoin, as much as I do believe eventually it becomes a digital gold, it's not at that maturity level just yet. So again, what are we watching for? Basically 66,000 right here, give or take. That's the line to watch. If we have a daily close below, remember, daily closes don't mean that it's a breakdown just yet. You want to see confirmation. Too many times I've seen closes below lines where it fakes people out and then rips back up. A confirmation below 66 or so, this trend line, then basically that would now put the probabilities to the downside for Bitcoin to head back to about the 52 to 49,000 level. So again, nice pop over the last, week or so in Bitcoin, but now 2 down days in a row. Let's see where Bitcoin is later. Maybe it can roar back today. We'll keep a close eye on that. Same thing on the top up here. This continues to be your resistance. So really what you have is a wedge pattern that's slowly getting tighter and tighter. Which way does price break? Does it break down here or does it break out above there?
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In this video, Gareth will share his insights on revealing critical levels to watch. At approximately 66,000, a daily close below could signal a breakdown, but confirmation is key. Beware of false signals. Meanwhile, the trendline suggests probabilities tilting toward a downside move, potentially back to the 52,000 to 49,000 range. Let's join Gareth in this interview about these topics and more.
Core CPI month over month, 0.1% hotter number. Hotter number for core year over year. Hotter number for regular CPI month over month. Hotter number for CPI year over year. Like literally, folks, we are seeing a hotter number across the board on every metric for inflation on the CPI. What did the markets do? Let's talk about that really quickly. All right, so what we're going to do real quickly is go back to our key charts and take a look. First and foremost here, guys, look at the dollar's move. Now, the charts told us this was the likely outcome. Remember probabilities. Probabilities are everything. And what we can clearly see here is, look at this, right? I've taught you guys the confirmation signal. Closes above. Doesn't confirm, doesn't confirm, doesn't confirm, confirms. Now this becomes a confirmed breakout. What does it mean? It means a retrace to the level is going to be technical support. Hits it here, technical support. Hits it here, technical support. Boom. Like that. That's the power of the confirmation signal. I teach that in my Winning Trader series. But listen, this is a big move. Looking at the 10-year yields, let's do a quick check on that. Huge surge in the 10-year yields. Remember what I was talking about. I said to you guys, if we get through this level, where's our next stopping point? 4.55% approximately. Where does that level come from? It comes from this pivot low right here and right here. And look, we're already above 4.5%, nearing 4.55%. So again, lots of action going on here in the charts as well. Now let's quickly go into the S&P 500. What is the S&P doing? Well, we could see, number one, what does this chart tell us, right? So again, guys, if you've been watching these game plans, I've literally walked you through every probable move in this market with unbelievable accuracy, to be honest. But it's all probabilities, meaning that there are going to be wrong calls, of course. But look at the channel. This is a steep wedge. We broke below. We confirmed. Look at that reversal engulfing candle. That's unbelievably bearish there as well. And let's flip to the intraday chart and see what is going on the intraday. This is where we closed yesterday. Boom. Look at that, guys. Holy cow. What a drop in the S&P. S&P 500, we can see again, guys, was trading higher going into this number, even pre-market. This is pre-market. And then just a massive flush to the point where we're trading just off of the lows. Now, you do have a little pre-market bottoming tail here. We'll see if we get a buy the dip. Do buy the dippers come in? We're going to find out. But that is a monster move.
Bitcoin's integration into El Salvador's governmental framework has complicated negotiations with the International Monetary Fund, IMF, potentially affecting the country's access to vital credit lines. Here's a simplified overview. El Salvador's adoption of Bitcoin significantly impacts discussions between the government and the IMF. The IMF seeks changes to El Salvador's Bitcoin legislation as a condition for extending a $1.4 billion credit line. Talks between Salvadoran authorities and the IMF resume soon. The IMF's concerns about Bitcoin risks remain contentious. El Salvador explores options like volcano bonds, leveraging Bitcoin assets. Balancing crypto adoption and traditional finance is complex.
If we flip over to the NASDAQ 100 and take a look, same sort of result. Big drop to the downside. And again, we're seeing stocks like Nvidia getting crushed today. I mean, basically everything across the board. But the thing is, again, we knew that the NASDAQ confirmed below key levels here was in breakdown mode. S&P was in breakdown mode. Everything was in breakdown mode. Now, if we flip over here, guys, I do want to go back and just quickly show you guys the Fed Watch tool. Look at this. This is unbelievable because, again, we were going into June. Yesterday was 50-50 for a rate cut. Check this out. This is mind-blowing. What we're seeing now is no rate cut in June, no rate cut in July. Now, it was basically before today, before this CPI data, it was basically the numbers were you were either getting one in June or you were getting one in July. There was no question there was going to be one in June or one in July. Now, none in July, none in June. First rate cut isn't going to be until September. And then look at this, guys. We get one more probable maybe cut by year end or into January, and that's it. So we're now pricing in that you could maybe only have one rate cut for this entire year. And think about this. A year ago, 1 year ago, as of now, we were saying, oh, and this is, by the way, this wasn't me. I was always the one. You guys know that have followed me. I said, guys, inflation's going to be sticky at 3%. It's easy, and I always use the abs kind of analogy. Like, you can get into great shape, but getting your six-pack at the end of working out is always the hardest thing. It's the last little bit, and it is freaking hard to do. Dropping inflation from 9% to 3%, okay, that's getting in shape. Now get that six-pack back to 2%. That's the hard part. And sure enough, what have we seen? Got to 3%. Now it's starting to move back up.
Bitfinex researchers predict a bullish future for Bitcoin, driven by the upcoming halving event. Here's a simplified summary. Bitfinex's analysis suggests a 160% increase in Bitcoin's value over the next 12 to 14 months, potentially reaching $150,000 per unit. Historical data and statistical models support this optimistic outlook. Bitcoin's current phase involves price fluctuations between $65,000 and $71,000. Short-term holders, spot buyers, and US ETF play a significant role in the market. Factors like job market growth, wage increases, and inflation commentary from the Federal Reserve Chair impact Bitcoin's performance. International developments, including regulatory reforms and stablecoin services, shape the crypto market's maturation. VanEck CEO predicts challenges ahead for spot Ethereum exchange-traded funds (ETF) as the SEC decision deadline approaches. Jan VanEck expresses skepticism about the SEC approving spot Ether ETF. Both VanEck and ARK Invest applications may face rejection due to concerns about Ethereum's regulatory status. Morgan suggests that initial rejections and legal battles could precede eventual approval, similar to past cases. CoinShares CEO also cites hurdles related to Ethereum's proof-of-stake protocol. Market participants closely watch the Ethereum ETF landscape. Regulatory clarity is crucial, and the industry prepares for a prolonged approval process with implications for Ethereum's market dynamics. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.